Hey everyone, this is Ryan Mallory for SharePlanner.com. Today is March 17th, 2016. Doing a live hangout here with you guys using the Google software, and what a market that we are currently a part of right now. If you look at it from the February lows established back on 211, this thing has rallied pretty much like 13+% so far. I mean, it's really amazing. Now, what's eerily similar about this is you see these little two circles here, the double bottom back in August and October. Same kind of price action here. It's like the market went all the way down, tested those lows, couldn't break through it, so it goes on this epic tear. Same thing in October. We rallied about 13%, and eventually you saw the rally give way to some selling pressures, go into a chop fashion for about 2 months or so, and then the bottom falls out of it back in January. So the question is the market's still not in good of shape as it was back in October after its 13% run. You got to remember, after that 13% run, it was right near the all-time highs. I think we went all the way up to like 2117 or so. Yeah, 2116. The all-time highs is like 2138, so it was only about 21 points off of that. We're about 100 points away from the all-time highs, or 97 to be exact. And we have got this huge mess to push through. And then, of course, the area that the October rally couldn't push through, or anything else can't seem to push through, is this nasty chop area that was established going back to February through the August time period of last year. So there's a lot for the market to still struggle and fight through. We're actually green, believe it or not. The market was actually green for the year for a little bit today, and still it's only about 2.5 points off of being closing green for the year. I was coming in today, and I was looking at the possibility of a bearish wedge forming, but that doesn't really look like that's happening. If you draw this, let me see if I can get the chart. There we go. If you see right here, you have this and this line here. You got basically like a rising triangle. They call that a bearish wedge. That doesn't look like that's going to play out today, unless we just really tank here into the close. So now you kind of like look around and say, okay, what kind of trend lines are relevant here? What kind of support and resistance is relevant? Because it doesn't seem like there's really any resistance that's relevant right now. You could say that might be relevant. I don't think you would want to draw the chart any steeper. I think you got to kind of respect these lows that were established back on the 10th of March. So you could say, yeah, that's still a narrowing channel, narrowing triangle, whatever. But honestly, that doesn't really qualify, in my opinion, as a bearish wedge. So let's get off of that. Overall, so this is one of the things that I think a lot of traders are really struggling with right now. It's been a strong rally. There's no taking it away from that. If you look at the S&P over the last 5 weeks, we've got like 5 straight weeks of 1% gains by the market. The last time there was actually something like that in the stock market was 2009, and I think over that 5-week period, the market ripped 25% higher. But you got to look at where it came from too. I mean, the markets were, at times like down 40% in 2008. So when it finally did bottom, yeah, it went on an epic rally. So I don't really think that we're going to see anything close to that here in the coming weeks. And besides, that 2009 rally was already done within a 5-week period where it did that 25% move. Here, you're not going to get that. So we got 13%. It's similar to what we saw in October. The price pattern is very similar to what we saw back in October. Does it peter out here? I mean, can it really keep pushing forward? Is it going to, like back in 2008, if you think about it, and I don't have the data going all the way back. I'd have to pull up another charting platform to pull that up. But in any case, if you look at 2008, what the price action did back then, we rallied really strong from 2000 or from like March time period all the way through May, and then the bottom fell out of the market in 2008, and the rest of the story. So, are we setting up for something like that? I'm not sure. One of the things that I've noticed about this market is extremes, and this is going back to last year for the most part, is that with the advent of high frequency trading and with extremes, it's not, you don't see so much anymore like okay, we're going to sell off 10%, bounce a few percent, call that a dead cat bounce. We'll bounce into some resistance, and then we'll restart the next leg down. You don't really see that anymore. What you really see is we're going to sell the crap out of this market, go straight down. There's not going to be any breather. There's going to be nothing. And then we're just going to go straight back up again. Now, if you look at the charts, yeah, we had a brief period where we created this double bottom where we tried to sell off and form new lows, but we don't form new lows again. So there's no like next leg down in these markets. It's like once the market sells off, you better get on board because you're really going to miss the big move. And once again here, it couldn't make a new leg down. So it's not like stages of a sell-off. It's like we're going to sell off. You're going to see the entire move, the entire sell-off all at once. You go back to August of this past year, the August sell-off was essentially, I'll zoom in a little bit more on this. This is 1, 2, 3, 4, 5. The whole August sell-off was 5 days. That was the extent of that entire move. And then, of course, we bottomed in October after basing for a while and went straight back up. Now, you take that again, you could see it's a little bit longer this time, maybe like a 3-week period, but it goes straight down. That's the full extent of the move. We base around and we go straight back up. There's no, okay, we're going to pull back and see if support can hold before resuming the trend higher. No, it is literally straight up. The 5-week chart shows that very well here, where it's just, one after another. There is no breathing. There's no sigh of relief. Back in October, the same thing, 1, 2, 3, 4, 5, 6 straight weeks before there was any kind of weakness that came into the market there. So the market does a lot of extremes. One of the better ways to see this too is on the T2108. This measures the percentage of stocks trading above their 40-day moving average. It's at 86% right now. Now, back in January, this thing had hit a low of 3.8%. The only other times where it gets that low, and I'll pull up the March lows on the weekly here. The only other times it gets that low is, let me change it to algorithm. It gets down that low back in 2008. Okay, 2009. It saw a low, the March bottom of 2009 only saw a low of 6%. So we actually exceeded that just recently here in January, and then we bursted higher. And so I don't think I've ever really seen a move that incredible. You had one that was back in the summer of 2011 after the summer sell-off. You had the big move there, but nothing like this kind of an extreme where you go from 3% all the way up to like 86, 87%. So big moves. And it's very extreme. There's no moderation to it, I guess is what I'm trying to get at. No moderation at all. It's just like straight down, straight up, straight down, straight up. And really at the end of the day, where is the market going? Where is the market going at all? Because if you look at the S&P 5, look at it from a weekly chart, where has this market gone since 2014? Since the beginning of 2014, where has this market gone? It hasn't. It's basically been in this great big square box, and I'll show it to you here exactly what I mean. And it's not entirely accurate. I'm not drawing it too good. Let me shore up these lines here. Look at this. All of the price action can be tested within this box here, going all the way back to 2014, going all the way down to almost 1800, going all the way up to 2100, and just vacillating in between. I mean, this is a massive head and shoulders pattern. So the question becomes, are we actually going to break the right shoulder and push to new all-time highs? I don't think we are, man. I think I'm not trading anything today, really, because the urge is to trade today. I mean, I saw it, and I'm going to go over a couple of these setups here in a little bit. The urge is to definitely trade this market today. And you can see right now, I mean, it's absolutely relentless on this 5-minute chart here. We look like we were going to pull back some there, popped right back up to where the S&P is like a fraction of a percent higher on the year, or yeah, higher on the year. I'm still trying to get used to saying that. But I have a lot of reservations that we're going to break through this right shoulder here and nullify a pattern that has been put in place for the better part of 2 years now. I don't see that being negated. So I'm not trading anything today because I do feel like that if I was trading, it would be more of an emotional ploy to chase this market higher. That doesn't mean I won't get long on something tomorrow, but I've had a chance to step back, reevaluate it, because this has been a very, very unpredictable market over the last few days. I got to figure out how to get rid of that daggum box, but if you look at some of these bigger moves, if you don't look at the moves from the last few days, this move and this move here, so the one from February 11th and again the one on March 1st, or I'm sorry, March 11th and March 1st, that move, those two moves have represented about 80+% of the move for the entire month. Now we've got 2 days of a really strong price movement that's going to dilute those 2 days significance a little bit here, but we're talking about, you know, some big movements overall in the index, but it's being contained within a relatively few specific days out of the month so far. So while the month is up very strong, if you take out a couple of the days, the month is entirely different. Still positive, but not that great. So you get this 2-day pullback, and then boom, you know, you start to curb your long exposure a little bit, and then the market takes off. You get this big doji candle pattern here that was just really concerning. I mean, you could tell there was a lot of indecision in the market. The market's going to ends up gapping up, and off we go. So there's been a lot of gaps. This is really, today was one of the better days for where a more pure price action, where the market gaps down and then it rallies, and all the gains from today is taking place during the actual market hours. There's no significant big gap up on the day. So let's look at some of these charts here too. A few that I'm looking at, ADSK. It's finally breaking out. It was a little bit lower on the day. I think if you can get in as close as to the $57 level and then put your stop at around 55, 52. I like this bull flag that it's coming out of. Looks really impressive for tomorrow. Definitely keep an eye on that. Facebook, it's down. I mean, really, if you look at Amazon, it's getting killed today. Netflix, it's given up some of its gains, but still an okay day. I mean, 1% is not a big deal for Netflix, but Google up as well. But you can see there, it's given up a lot of its gains. Taking a look at Apple. Apple, it's not gone anywhere today. It's come off of its lows for the day, but it's not really moving. I mean, your big moves are like in like your oil and everything else, which is up another 4% today, and obviously taking a lot of stocks with it. Chevron up almost 2%, Exxon up almost 1.7 or 1 3/4. So back to Facebook, I still think the chart looks pretty good. I would like to get it under 111, get in that 110 area. You can see there's a strong level of support there to where it can pull back and bounce and go up to its all-time highs again. GE, this one's really amazing because I was watching it today, and like I said, I had pretty much resolved myself. I wasn't going to buy anything. I just wanted to let the market action play itself out. There's been a lot of emotion in the past few days with traders and just with where this market ultimately wants to go. And then you have the Fed just basically throwing gasoline on the fire with them peeling back those 2 of the 4 rate increases. GE, you have a cup and handle pattern here and a nice little consolidation, broke really good out of it today. If you can get anything back around the 3150 area, I think it's worth buying. AZPN, this was in my swing trading watch list from from this morning before the market opened, broke out beautifully. Really good chart there. CAA, another breakout there, inverse head and shoulders pattern. Just starting to break out, so that's one you can keep your eye on there for a possible entry. And then DIS, Disney, We know the story behind that. It's been a tough go for the company of late, at least for its stock price. Rides are always still fun to ride, but DIS getting through that support here, or through that resistance that was overhead coming into the day, pushing through that. Looks like it could make a run to the 200-day moving average. Best case scenario, maybe 110 before it faces any real test. And then UTX, real good move out of it today. Came in today with a nice little bull flag. I still think, this market's probably going to be due for some profit taking. Tomorrow would probably be the ideal day to see some of that profit taking, particularly as a lot of times on Fridays they tend to be the weaker day of the week, and you could see some people start to want to take some of those gains ahead of the weekend. We didn't really touch much on USO, but you could see this thing is just still full on rally. You got crude, shooting over $41 today, trading at $41.50. So there's a lot of momentum behind the oil trade. A lot of people pouring in some money on that. Whether or not the bulls get the rug pulled out from underneath them again remains to be seen. But this is really the best rally that taking USO, for instance, that it has seen in quite some time. And really, I mean, if you look back, that maybe the best one was in the summer of last year, where we bought them, and it's pretty much the same time period too. So whether or not we break out and go sideways here for a little while, only to sell off during the summertime, remains to be seen. But right now, really strong rally, really good base, and we'll have to see whether it can hold on to those gains going into the April and the summer seasons. So, all right, that's going to do it for now. If you have any questions, feel free to shoot me an email, ryan@shareplanner.com. I'd love to have you in the Splash Zone. I provide all my real-time trade alerts every day via text, email. That's for international traders as well. And I post them all live in the chat room. So if you have any questions, feel free to email me. You can sign up for the Splash Zone by going to shareplanner.com/splash zone. And it'll have all the information you need to get started. Once again, y'all have a great day, great Friday tomorrow, and a great weekend ahead. God bless.